Thank you for joining us at xm.com. For this Forex Preview video, we'll be looking at the Reserve Bank of Australia policy meeting due on Tuesday and, of course, the outlook for the Aussie. I'm Cristina Marujas, and joining me today is Cristina Partenido, investment analyst. The Reserve Bank of Australia governor sounded quite dovish during a speech in mid-September, Cristina, saying that he considers appropriate to delay monetary tightening actions, given that the recovery has been already delayed because of the regional lockdown measures. Will the RBA maintain that dovish tone during this week's policy meeting?
Hi, Christina. Well, the RBA has already started to cut its bond purchases. It didn't really violate its taper schedule as analysts expected last month, despite the challenging COVID conditions, which are expected to weigh on economic growth. And instead, it proceeded with another cut in its weekly bond purchases to 4 billion Australian dollars from 5 billion previously. It has already informed markets that it will keep buying at this pace until February. Basically, with this strategy, it has extended the duration of the tapering process while remaining compliant to its tightening schedule. So probably the central bank will not take any further actions as regards QE until February, but that doesn't mean that it won't review its program, since the uncertain pandemic period is not over yet and the economic environment could face extra challenges from the energy crisis and China's troubleshoots around economic growth and its property market, which is still at risk. We shouldn't forget that China is a key buyer of Australian exports, so the bank will probably adopt a wait-and-see mode, closely monitoring developments in China and inflation, of course. Now, regarding interest rates, there are no plans for any changes on this front either before 2024, the earliest. We shouldn't forget that Australia is also facing a red-hot housing market, and recently the International Monetary Fund has advised Australia to take some lending curve measures to cool house prices. But probably the central bank will keep focusing on the labor market. It said that unless inflation rises sustainably to 2 to 3% range target and wage growth moves sustainably above 3%, interest rates will not change. Also, the governor has signaled that the next GDP release could see a bigger contraction than expected, and the jobless rate could increase at a higher pace. So basically, the central bank may show some discomfort with international and domestic economic developments at this week's policy meeting and avoid any tightening promises this week, although vaccinations have made significant progress in the country.
So if the central bank does keep a cautious tone, how could the Aussie react?
Well, probably investors are largely expecting an uneventful policy meeting, which may contain some cautious comments. So if true, that won't surprise investors, and therefore the Aussie may not show any significant volatility. Recently, the government stated that it's preparing to relax lockdown measures and open borders if vaccinations meet targets. So although infections are rising, the government is preparing to live with COVID and ease restrictions, and that has helped the Aussie recover a bit recently. So perhaps the third quarter data may not be very optimistic and perhaps outdated, but probably any upside surprises could provide some support under the Aussie, unless of course the Fed continues to send hawkish signals, in which case the dollar strength could hurt the Aussie.
Cristina, thank you so much for joining me today. This was a Forex Preview on the RBA policy meeting here at xm.com.